Hello, ladies and gentlemen. Today is September 20th, 2022, and this is another edition of the MSP Initiative Live. It is a Tuesday, and we are well underway into the fall season, at least in this part of the world, and lots of stuff going on in technology land. No special guests today, so we're just going to kind of talk about current events, and for anyone that joins the show live, you'll be able to jump in and chat a little bit radio style, and we'll go from there. So as usual, the first thing we do in any of these is kind of go over some housekeeping. So that's exactly what I'm going to do. So mspinitiative.com here under sessions, this and every other session we've ever done since March of 2020 will be available in podcast and video format. So you can rewind, fast forward, come back and call us out on the carpet because it's all recorded and, hold us accountable. We'll be doing some giveaways with some of our vendor sponsors. They should be announced shortly. Basically, we'll run now between the end of the year, some cool prizes that are going on. We have our 3 MSP community block parties, one which is already done. So if you missed the event in DC around DattoCon, we posted all of our pictures and soon to be videos on the MSP Initiative Facebook page. You'll see an album that kind of gives you some of an idea of what happened that night. But it was cool that we were able to take over an entire stadium, and hopefully we have an opportunity to do it in the future. It definitely comes with its own challenges, but totally has the cool factor. We have one coming up tomorrow in Fort Lauderdale. So I don't know if you've heard of Taylor Business Group and the Big, but if you actually just Google that, Taylor Business Group, or just go to taylorbusinessgroup.com/big, they have an MSP-centric event in Fort Lauderdale at the Diplomat Beach Resort. This is at the scene of the last Autotask Community Live for Datto and Autotask merged. So we are actually throwing an MSP community boat party down the Intercoastal in Fort Lauderdale. So if you're at the event or you're in the area, you're an MSP, definitely join us. So that is the second one. The third one is coming up here on November 9th. So if you're going to be in Orlando, or you happen to be in the area or within driving distance, or already going to a conference in Orlando that week, we are throwing the last MSP community block party of the year. And you can hear our music's already playing in the background. We are flying in the All-American Rejects to do a private concert for the MSP community, as well as, some other festivities. So November 9th, Icon Park, join us. It's going to be a good time, and we're really excited for it. Lastly is the Channel Strong Tours. We have 3 weeks left of these. This is where we come into, literally MSPs host us in their parking lots, bring in a tour bus, band tour bus, and we kind of set up shop in the parking lot, and for 2 to 6 each day. So this is good to learn from other MSPs in your area. Don't have to hopefully jump on a train, plane, or boat. You can just jump in your car and drive on over, take an Uber, take a scooter, but be safe. So we have Denver, Tulsa, Topeka, St. Louis, September 26th through September 30th. In October 17th through October 21st, we have Vegas, Phoenix, San Diego, Irvine. And then lastly, we have November 28th through December 2nd, Fort Lauderdale, Tampa, Orlando, Atlanta. So those are all our announcements. A lot's going on between now and the end of the year. Just a special shout out to Paco and Rick, who put on TechCon Unplugged in Chicago this past weekend. I was able to attend that, and was nice to be able to, get a more smaller, inclusive event that, really kind of maybe broke out of normal breakout session mode and got into the weeds, which was really nice. So shout out to them. I think there was like maybe 50 to 60 people there that attended. It was a good event. I enjoyed it. Got myself a Chicago hot dog. Need to go back and get some, apparently not deep dish pizza, but flat pizza, not flatbread, but flat pizza, which apparently is what the Chicago natives eat. And I just need to get into the mix and, follow down the beaten path. So with all that being said, those are all of our announcements. Lots going on. I'm still recovering from a combination of Datto, this event that we did in Chicago at TechCon, and then tomorrow back out on the plane again to go down to the big conference. And then I kind of snuck in an Eagles season opener here in Philadelphia. So if you watch Monday Night Football, I know there was 2 games. So congratulations to the Buffalo Bills. But my Philadelphia Eagles, and if you're a Philadelphia Eagles fan, I think you're pretty happy today, did pretty good. So no special speaker today. Just figured I'd go over a couple of current events. Again, anybody who's on the call who can be unmuted, you can always jump in and talk shop and give us your opinion on what you think's happening in the day-to-day. But I have, picked out some stuff that I kind of saw popped up in the feed and figured it'd be worth going over. So here's your like to the bumper music for All American Rejects. Thanks, Bruce. Appreciate that, buddy. I hope you come. I'd love you to hear them live because, everybody knows if you listen to the radio, I'm sure you've heard their stuff. So some current events that I thought were worth going over. Again, kind of see these come into the feeds and flag them as things go on. And, now's a good time to bring them up. So of course we had kind of post DattoCon feedback, right? Like what's going on and why, what did people get out of DattoCon and what were the big things to take away? I was definitely there. I heard the big Fred keynote, right? Which was kind of, what's the future, right? I think a lot of people went to DattoCon to really get an idea of what was going on. I know we talked a little bit about this earlier. So, of course, Kaseya saying they're going to spend a lot more investment into Datto. I mentioned in a podcast earlier that, they feel like it costs them $20 million a year to keep all of these maybe overlapping products updated and keep them going versus what they feel is a $500 million a year loss if they were to shut products down and try and force people onto other products. So their view of the world is keep all the lights on, keep everything going, even though that there's a cost to do so. So they came out and said, hey, we're lowering prices. They put in here where they're not forcing 3, 5, 7-year contracts. They said they are lowering prices on average 15%. I mean, we'll see, right? But if you're a Datto partner, you'll obviously be paying attention to the pricing. In this slide, they're saying, hey, we're making more investments in here. We're learning some of the stuff that Datto did well and trying to build on top of that. So there's more money coming into that mix. They feel that small, medium business is where there's massive growth in the market versus like, the Fortune, and larger companies out there. So they think that there's a huge upside that's, currently not being handled by the MSP community as it stands today, which means that there's more business out there. And so that's why they made the investment. Talking a lot here about co-managed and how, basically, as things happened, and we talk about this from time to time with the economy, as the economy switches into a downturn, it's like a open field for MSPs because the IT departments end up getting shrunken, although the technology burden is still there, which means, MSPs in a co-managed way can step in and try and help grow in that way. So that was one of the big things that they touched on, especially with some of the things these IT departments just don't have time to do. They think the MSP sector is, I'm not going to say recession proof, but they think that it's hot and it's going to continue to be hot, even though the economy may be pointing in the other way. We'll see. I mean, we always say that there's some sort of buffer when things happen on the street versus what MSPs feel, sometimes 6 months, 8 months a year. But we see a lot of technology, more SaaS, companies laying people off that are venture backed, private equity backed. So I wonder how that continues into MSP land, but they have it here in print, white hot. I guess we should all feel good that there's plenty of business out there. The rest of these real quick. It's kind of getting stuck here. Let's see if I can just, there it is. They're saying competition is heating up, right? That basically more and more people who are going out to shop for IT services are running into multiple MSPs versus what they were seeing even 5 or 6 years ago. And then basically, there's just more competition out there. And so you have to get a little bit more sophisticated. But they are saying that they're seeing a noticeable increase in dedicated sales and marketing resources, whereas before they only saw a certain amount. They're seeing growth there, and they feel that that's important because MSPs generally have problems in those areas, and they feel that that's a good sign that things are maturing in the right way. Definitely talking about labor. This was a big part of their conversation. How much does it cost you to source the right people, and then how much of that time is being spent managing multiple vendor relationships? And this was a little bit of the Datto pitch, right? Or Datto could say a pitch that, hey, we're taking 17 different line items in your stack, and we're making it one vendor, one bill. So take that for what it's worth, but they're saying that you should be able to save time so that you don't need as much personnel, because it's very difficult to find the right people. A lot of security conversation, and that technicians they're too spread out across multiple things that they're doing every day, that they're not experts in any one area. And this was part of the, hey, if you take on too much internally, you just don't have enough time to do anything very well. So there was this part of the conversation about balancing. The last one on this slide is, hey, cut out the time, using the different technologies. I kind of mentioned it earlier, and use that to your time benefit. So some of this stuff does have some, reality to it. Some of it is a little bit of marketing. Some of it's a little bit of the business pitch, of what this consolidation effort is on the Kaseya side. I don't know if anyone on the call was at DattoCon and heard this live, that's on the call, but more than welcome to take what you think your feedback was from anything you heard coming out of DattoCon. Crickets. So we're all just waiting to see what's coming out of there, rightfully so. So I'm going to skip over to the next thing. I thought this was interesting, right? Glassdoor, right? The one-way street where, disgruntled employees post things about their employer. But apparently at some point, good people write good things. And so I thought this was interesting. So here, I don't know if there's any surprise here, right? Even though all these companies seem to be laying off right now, but millennials are saying, or Gen Z is saying, Microsoft's one of the high-rated companies, followed by Google. I guess, should we be surprised by these results? Followed by IBM. These are companies that these people want to work for. MongoDB, Procure Technologies. Let's see, I'm just speeding through these. I just thought it was interesting that they actually went back and pulled these stats. NVIDIA. Of course, all these people leave school. ServiceNow, and pick up jobs with the big guys. HubSpot out of Boston. We use HubSpot. LinkedIn, currently owned by Microsoft, and a company called Smartsheet. So guess somebody does read these Glassdoor reviews and then makes a slideshow about it. Moving on. So this one's actually interesting. So all the distributors started advertising this, right? Basically Microsoft's rolled out GDAP, right? Which is like a different way for partners to securely access all of their downstream customer 365 environments, tenants. And so they rolled out this new security thing saying, hey, by the end of the year, we need everybody on this, right? So, start deploying it now. And then surprise, surprise, they delayed that. I guess interesting things always come out of Microsoft and they always get delayed. But basically, if you haven't looked at this, granular delegated administrative privileges, where every tech in your company has a user account rather than sharing an admin account, right? Because we're trying to like progress the security posture. And basically what they're saying is, hey, you need to go in and you need to actually activate this and just stop accessing things, manually, right? So there, do some homework on this. There's some, they have a bulk migration tool link here, but there's definitely some information out there on this. It's supposed to be, something that all Microsoft partners should be deploying. Of course, it's been delayed, but that doesn't mean that this isn't a good way to handle security moving forward. Because, the last thing you want to do is be the weakest link or chain in the link. Last week, there was a Zoom outage. I don't know if anybody noticed that. We were still able to get our Zoom session off, but apparently there were pretty big chunk of Zoom customers that couldn't use the platform. That included both the web meeting, phone, the whole thing, right? So, of course, as everybody kind of tries to centralize their stuff on these platforms, this is the reality, right? Nobody's immune.
So it looks a lot like that was a predominantly East Coast thing. Didn't the first message say it happened at 10:30 Eastern time? Well, that's 7:30 Pacific time, and nobody over here in the Pacific is doing anything at that time.
Well, I mean, keep in mind. Actually, here's a trivia question for you. What percentage? I'm going to give you two questions there. What percentage of the United States lives in between Northern Virginia, Boston, and Pittsburgh? I will, granted, this was a pre-pandemic percentage that I'm going to throw out there because I know people are moving southward in a lot of cases. But what do you think the percentage of the entire U.S. population lives in that Northeast triangle?
I don't know, let's say a third.
Okay. So what, 33%?
Yep.
All right. How about 41%? And I think that almost 80% of the population lives in between the Atlantic Ocean and the Mississippi River. So I don't know why, I mean, we could go back in how the states were made. I know the History Channel runs that pretty cool show, but like it is what it is, right? So bottom line is a lot of people use Zoom for their phone system. A lot of people use Zoom for their web meeting system, obviously webinars, stuff like that. I mean, when these big guys go down and they're all affected, right? Microsoft has their problems. Slack has their problems. Everybody runs into an issue at one point or another. There's no silver bullet, but there it is. Keep that in your back pocket. If everybody asks, well, we're just going to do Zoom for everything. Well, what's your DR strategy when Zoom goes down?
Yeah, just this morning in the bathroom, I noticed that Teams has got a big black mark on some security thing that they're not doing.
Yes, that was actually one of the things that that came out last week. The credentials are saved in clear text. Underneath of the applications for Windows, Mac, and Linux-based. I'm surprised who's using Linux-based Teams, but yeah, that's a boo-boo. And I think Teams has kind of been, lipstick a little bit over the last couple of years. Like they haven't really rebuilt it into what it probably should have been. They just kept on bolting on things in order to kind of compete with the pandemic. Everybody working remote, but it means they have to go back and fix it because that could be a problem. This one, funny enough, Zoom's like, hey, by the way, we announced this deal with Five9, we terminated it, and now we're competing with our own solution. So I thought, figured one Zoom article and another kind of fit together. So again, when you're relying on these big guys, right? They're not perfect either, but apparently they're playing in contact center land as well. And there it is. So this one's interesting. So we know NCE, right? It's like, don't talk about it. It's a bad thing. But in order to incentivize people, Microsoft's launched some discount and upgrade programs. So they're giving a 16% discount valid until June 30th of 2023 for new customers to Microsoft 365 and existing customers who want to upgrade to a higher tier. So 16.7% discount. I didn't get deep enough into, so it says valid plans are Business Basic, Business Standard, Business Premium. Discount does not work on legacy subscriptions. Okay, so those are the ones that were indefinitely put on hold, right? For people who didn't migrate to NCE. I'm wondering if that discount applies to the monthly options. Okay, 20% premium when we know about that, right? Customers buy annual, hook for paying the rest of the contract. We know this. So the discount, right? Discount ends for customers on first month anniversary date after June 30th. So this is a limited discount, right? So basically it's from whenever June 30th until the renewal date of that subscription is. So that probably means that it's not going to be applied for the month-to-month option, right? It's going to be applied to the either 1 year or 3 year options is my guess. But hey, it's a discount nonetheless. Now you know about it, right? 16.7% discount.
And is that discount just for the first year, or is it?
It doesn't even look
perpetual?
like it's a full year. It's in between June 30th and whenever the 1-year renewal comes up.
Okay.
So it's like it's like a Band-Aid, I feel like. But
It's like a GoDaddy tease, huh?
you said it, not me. So yeah, I mean, obviously there are a lot of people that had legacy subscriptions that waited till the last second and they didn't have to deal with this 20% increase. But at some point, in order to do new stuff, you got to go under the new, and I guess this is a limited time discount. Well, nice to know it's out there. I'm going to jump over this one because this one's pretty big. Another company, Twilio. We've all probably heard this name one way or another. It's 11% workforce layoff. Once again, big companies are not immune to the economy issues. So that's roughly 850 employees. It's a lot of employees.
So educate me a bit on this. I mean, I continue to hear, from all the industry things about all of the different jobs, yet I also see all these things where people are getting fired. Am I missing something? Is this a bit contradictory? What am I missing here?
Well, I mean, big picture, when the economy goes in the wrong direction, the private equity and venture capital people out there who make all these investments across all these companies, and Twilio is no different, right? They're actually publicly traded in this case. But basically what they have to do is they have to start reducing headcount, because usually your employees are your most expensive business expense. And especially like going on the one side, right? On the private equity venture capital people, when their interest rates start going up and they start to realize that they can't release pockets of money to their downstream investments, they go back to those people and say, instead of showing us rapid growth and we don't care about the bottom line, they flip the script and say, you now need to show us, cash flow positivity, which in a lot of these cases, these companies who get outside funding are running in the red, right? They're just growing at all costs, and trying to burn through the money to actually get to the highest possible, growth rate. But then reality sets in, right? And like when they get these, kind of investor calls saying, hey, you need to cut X% of your headcount in order to show profitability, or in order to show, be in the black, if you would, on your own, that flips the script a lot, right? And that, a lot of these guys do a lot of hiring because they have the money, but then obviously those are the first things, the people get cut when they have to flip the other way. So from about maybe 90 days ago-ish, like beginning to midsummer until now, there's been hundreds of companies in the technology space that have had to cut headcount because they have to flip their numbers around. Obviously, with shareholders, right? They, when you're a publicly traded company, you have to actually go and say, hey, here's our forecast, right? Here's where we think we're going to be this year. And, here's where our numbers are. And when the economy flips and they don't have a plan for it, the first thing they need to do is start cutting costs in order to kind of true up their math. So, unfortunately, employees are the biggest, like I said, one of the biggest expenses to any business. So, in this case, it was only 11%, but I'll admit, I didn't realize 11% only meant 850 employees. So Twilio obviously has a way more employees than I thought, but yeah, that's still a lot of employees. Does that answer your question there, Brett?
Yeah, so give me your your business expertise here, since I know that you've got the crystal ball in your pocket there. Tell me, what is is it a good business way to go through and to run crazy in the red for things, or should you always be making sure that you are in the black? Is there something to be said for taking that risk for a business, or does it make more sense to always be, a little bit cautious, always make sure that you're a little bit covered? You're the businessman or whatnot. I want to know what your personal opinion is on doing.
Well, I think every business is structured a little bit differently, right? And as somebody who's running an IT services, managed services company, yeah, you should be very careful about your bottom line, because generally speaking, that's how you're valued, right? So if you were to go to an outside party right now, let's say you weren't even interested in selling your company. Let's say you were borrowing money maybe. And the bank's like, well, I need to understand more about your business. I need to understand what you're doing. I need to understand how much money you make, who your customers, this, that, and the other. And you bring in an outside company like Reed Warren, for example, from IT Valuations. I know we have him on from time to time. He'll come in and say, all right, well, your business as an IT service managed services provider is based on net, not gross, right? So your net is very important, because that's how they start to determine from that number what your valuation is. It's usually a multiple of that. It's different in software as a service or subscription-based businesses, where their multiple for the long haul has been based on their gross, right? Whatever their top line reoccurring revenue is. So completely different math. Okay. I don't disagree with you that you should run your business to be profitable. You shouldn't be running your business to be in the red. And because at some point the bill does come due, and if there's no outside money person pumping money into your business as an investor or partner, then that you'll end up in a bad place. So 100% agree with you on that front. And there is things that you can do as a managed and IT services provider to benefit your valuation, right? Less hardware sales, less one-off project work. Try and do everything under a reoccurring business offering, right? And that way you get closer towards a higher valuation, because it's predictable reoccurring revenue versus one-time revenue or project-based revenue, which you have to continuously rebuild with new customers or new projects over and over again. Same can be said for hardware sales, or one-off kind of things that you buy through distribution and just put a markup on and send it out there. So all that being said, yeah, I mean, there are companies in the space who are face companies, I call it, who basically have a venture capital company or private equity company come in, acquire that MSP, and then start acquiring other MSPs and putting them underneath of that. And this is not just exclusive to the MSP space. You see this in medical, you see this in a lot of other industries where you get a group of companies, right? Let's say I got a group of 20 physical therapy companies, and I put a rubber band around them, and now the total value of all of those companies viewed as one block is a lot different than 20 of those individual companies lined up separately. So it's the same game kind of being played in MSP land. But again, when you have an outside money person or money company coming in, the game is a little bit different when you're operating as that group of companies versus an individual company. I know Reed came on, it's probably been about 2 or 3 months now, but basically, like, imagine if you were in a peer group and you took 3 or 4 or even 2 companies, 2 MSPs, put a rubber band around them, and you built a larger company. The valuation of the larger company will be higher than individual businesses. And so generally speaking, my best advice to you, Brent, and again, agreeing with a lot of what you're saying, is run, they say run as if you're going to sell your business, even if you have no plans of doing so, which means that you're watching your math, you're lean, and you're being wise about where you're spending your money, so that you're cash flow positive, your net is growing. They say best in class is 20% growth net annually or above. So if you can reach those types of numbers, you're doing very well in IT and MSP land. So that's my best advice to you. And as a person who's running private businesses, I mean, the economy does affect how you decide things, right? And whether you hire or fire more, or add or remove staff, whether you're, taking risk in terms of bringing on certain types of customers where you may want to be a little bit more conservative, where you're not fronting a lot of stuff out of your own, bank account versus shifting that to third parties. I know a lot of companies do hardware as a service, right? And they're bankrolling that out of their cash flow instead of pushing it to an outside company who does that on your behalf, so that you're not fronting money, stuff like that, right? These are the types of things that you want to watch out for generally. But Brent, yeah, I mean, I would say unless you're, unless you got somebody coming in saying, hey, I'm going to invest X amount of money to buy a part of the business. This is the game plan. I need to get to this dollar or this, sales amount or growth amount in order to hit the number that I need in order to make this worthwhile. Usually there's some sort of string attached to that plan. And then all plans change, right? When, you came in thinking, the economy was red hot, like what, the people over at Kaseya said, hey, we're in a recession, but MSPs are red hot. Okay, that's fine. But that doesn't mean that I should just be, taking very, big risks in how I run my business. I know a lot of people always say, Brent, hey, it's a luxury when you can, basically be selective with your clientele. When you're first starting, a lot of people, just take anything in order to just start building revenue because they got to pay the bills, especially people that left internal IT or corporate America and started MSPs, stuff like that. But when you start to mature your company and you start to grow and you actually have revenue base there, you know what a good customer is and what a bad customer is, right? Like, a bad customer is somebody that doesn't take any advice, duct tape, wait till the thing burns out and there's smoke coming out of the back of the thing before they go and do something about it. That's a bad customer, right? I don't think anybody will argue that they don't want to drop everything they're doing to go deal with that over and over again. I'm not saying it doesn't happen. You just want to reduce the time, the amount where it can, versus somebody who's like, hey, listen, tell me what I need. I want to make sure that the car is running. I don't want to be on the side of the road waiting for the tow truck. That means I have to maintenance my stuff on a regular basis. I have to replace stuff. I have to keep up with stuff. Whatever that is, put me on the program so that I don't have to worry about it. Check the box, run my business. So like, what's a good customer and what's a bad customer. I would say that as businesses mature, they become very, very selective and not taking anybody off the street as a customer because there's risk involved, right? And you don't want the noisier customer if you can help it. Tell me if I'm wrong, Brent.
Yeah, you know what? Okay, here we go. I'm going to admit some of the mistakes that I've made, and even fairly recently I had an opportunity to work with a large outfit who, you stop and you look at them and you figure, these guys got to be spending $5 million a year in rent, just rent, let alone what their employee costs are and stuff like that. And I couldn't get them to find a value in backup. No kidding. I talked to one of the guys who was running the business, and I said, dude, you're still on a 10-100 switch, right? And he looks me in the eye and he says, I don't need to go fast. Why do I need to go fast? And I stopped and I thought to myself,
I think I'm backing away from that one.
How do I answer that? How do I come back from that? However, I have these fantasies that I'm going to rescue them from this mentality of insanity, and I'm going to bring them up into the current, standards of things, and whatnot. And after a few months of doing that and continuing to not make the revenue that I needed to make from the people, I kind of realized that now I know why they are in the position that they're in.
There's two general areas where I see anybody in IT MSP land get themselves in trouble. One, taking on clients that you absolutely know are bad clients just because you're stuck and you need the revenue. And that, when it's all said and done and you look at the math and you evaluate your time investment in that customer versus what you're generating in revenue, if you're break even or upside down, you might as well have not taken the customer on at all. So that's number one. The other time I see MSPs get themselves into trouble is by, I call it punching above their weight. Okay. So if you're generally dealing with, I don't know, between 30 and 75 employee companies, and comes along a 200 person company that's bigger than anything you've ever dealt with before, it's a different animal. You're going to have to do your day-to-day with that one account is going to be completely different than everybody else that you're dealing with. And you're just not configured properly and prepared to do that. And that's when, but the dollar amount looks great, right? So everybody's like super excited to take on that really big customer. But unfortunately it comes with a lot of headaches. So those are the two areas where like 100% going to have problems. I've seen it over and over again, and people don't realize it until they're into it. I mean, the third way people always get into trouble, especially when the economy's not doing great and everybody's watching their pennies, and I'm not saying do this, but the people that do it, is they start to cut corners, right? The stuff that they say that they're delivering, they're not really delivering, or they just barely installed the application to do that checkbox for that line item that you bundled your services together, but like you're not actively doing that piece, and as a
Not
result,
actively managing it.
yeah, I mean, you're kind of waiting for the shoe to drop, and that's when you get yourself into trouble. So those three areas, right, are where things usually go badly. But back to your original question, Brent. No, if you have no reason to spend crazily and hire people like they're you're going out of style, I guess. Don't do that. Run your business lean and be as cash flow positive as possible. And I'm not saying spend money in areas that you don't need to unnecessarily, but there's just certain areas where you wouldn't overspend, because you're trying to be conservative with the way that you're building your business. That being said, sales and marketing haven't, it's not a new story, but it'll never go away, right? One of the things that we mentioned in Fred's presentation there was, they're seeing more dedicated resources for sales and marketing now in MSPs than they did 4 or 5 years ago. True. I think the message after 20 years has finally started to set in that you can't just, wait for a referral or, go door to door looking for business. Like, you have to change the way that you're, prospecting and generating new clientele out there. However, there needs to be a plan, and just spending a whole bunch of money on AdWords, for example, is not the answer. There needs to be some sort of plan. And I would say the biggest problem people have on the sales and marketing front, Brent, not that you asked, but since we're talking about, how should I run my business, is if you spend all this time finding an outside company or start, going down the sales marketing end to generate new clientele. Number one, it doesn't happen overnight. So don't expect it to, no matter how much money you spend. And number two, you have to have a follow-up plan. Just getting people to interact, you need to then take it the rest of the way to see if that's a good fit, to figure out what these customers are doing, to figure out if, there's a, you can provide them services that they need at the right price. And like, that part is where I've seen so many people die on the vine or fail, is that they have a marketing plan, they put it into place, they have an outside company, spend a lot of money with put into place, they generate these leads, but then they're not actively followed up with. And that's where you're just burning time and money. So, that's the challenge. But sales and marketing is never going away. I just think you need to do it intelligently and with a plan, and work backwards from how much business you can handle versus just waiting for them to show up and hoping that you can figure it out. Sorry for going on a rant there, but
great advice. Great advice.
Yeah, I wish people, I mean, I learned a lot about this industry from other people in the industry, right? I mean, yeah, I went to the conferences and I went to the trade shows, I went to the breakout sessions, and there's some value there. But like, learning from the people sitting next to you that are doing the same thing that you're doing, hopefully not right next door, maybe in another city or another state or another country for that matter. But like, you learn from, what other people are doing and what's working, what's not. And I can't stress that enough. If there's MSPs out there still thinking everybody's your competitor, I think you need to break that idea, and you need to go out there and learn from people, because they're out there, right? There is a greater MSP community, despite what people think, and they are willing to share, but you do need to actually get in there and communicate a little bit, which I know for some people is problematic. Couple of other news stories that are worth mentioning. So KnowBe4, right? This security education platform. So they got a $4 billion takeover offer from Vista Equity Partners. Who remembers this name? Anyone?
No, who are they?
So Vista Equity Partners is the company that originally invested in Autotask, then merged Datto and Autotask, and they were the largest shareholder until Kaseya bought them for 6.2 billion, them being Datto. So another PE firm or VC company, that's really VC company, not PE firm, that's in the software space. So KnowBe4, again, based out of Tampa, which seems to be a hotbed for technology businesses in the sandbox, I call it. I know KnowBe4 has maybe been more of an enterprise play, right? For security awareness training, simulated phishing, stuff like that. But there you go. These guys are always out there. They're another one out there.
So is this what they did with all the money that they got from their the data acquisition?
I'm sure there's a lot of things that they're doing right now. But you know, they're what they're doing is they're probably going on the Wall Street, just a guess. I don't know. They're probably going on the Wall Street and finding underperforming companies that are publicly traded, and then they're taking them private. And then they basically try and grow the valuation of that company, and then either go back to a publicly traded company again, or they sell it to another company. That's usually what we see historically. But here you go, 1,600 employees. 40% of its revenues are from the channel. There you go. So these guys are still going out there and doing big deals, despite it's not the economy is incentivizing them, I think.
Something I've kind of discovered too is that, a lot of times you always think that when somebody gets acquired, it's because of their products and stuff like that the company has, and I've heard of many times when it's not really the products that they're looking for, it's the assets that the company has. Oh, they've got this huge pool of engineers or something like that. And that's what the company wants to actually acquire. And quite frankly, they couldn't care less about the product or the service that the company is offering,
I guess it depends on the situation, Brent, because like sometimes people are specifically acquiring a company for IP that they have, or a specific set of technology that they need somewhere else, right?
Yeah,
So
yeah.
they're trying to take technology. I think this happened with a couple of companies in the sandbox, where they bought the password manager and merged it in with this, cloud solution, and now it's all one big solution, stuff like that, right? So that happens, right? When you're missing a piece and you go, instead of building it, you buy it because it's faster to go out and do that. But then, the other times where you're buying a company and then you're trying to grow it, and it's like house flipping, right? They buy an asset, a property, a company. They put this 3 to 5 year window on it. They try and grow the heck out of it, and then they turn around and then they offload it and make 2x, 3x, 5x, 10x their investment. So they have a playbook, right? We talk about this all the time, right? When all of a sudden somebody is acquired or takes investment from a big company, and then like the sales happen a certain way, the contracts are structured a certain way, like certain tactics that they use are the same, and then we all hear the grumbling on the right and the wrong way to do things. But there is a little bit of rinse and repeat. There's no question about that, Brent. And if you're ever in a position where you're behind the scenes on one of these, I think you'll see what I'm talking about. They come in with literally the blueprint and the binder, and they're out there just installing it and making it happen time and time again. So
the folks that are a lot more versed with financing than I.
Yeah, well, I mean, unfortunately or fortunately, this is the way people, grow and buy and sell these days. It's just a little bit different than back in the day. So Dark Cube, they were actually out in Chicago at TechCon Unplugged. Looks like they actually were acquired by a name we, not so familiar with in the industry. So looks like the founder is sticking around, Vince. So if you haven't seen these guys around, they've been around, they've been popping up at a lot of the events recently this year and previous years. Dark Cubed, another kind of cybersecurity solution out there. So check them out. This one was pretty beefy. So Microsoft's announced partner program changes ahead of Ignite 2022. Ignite's one of the what used to be in-person conferences that are now virtual, and I believe they'll be coming back to in-person in 2023. But for this year, still virtual, Ignite 2022. So a lot of announcements here. I'm just going to kind of breeze through them, but definitely worth going back and kind of digging into some of these. So one of the big complaints about NCE was the portability of customers, right? So like, once you locked in a term with an MSP, you couldn't move to another MSP or vice versa until the term of that 365 agreement is over. Well, apparently there's some way to do it now. Portability of customers. I didn't dig into too much of it, but apparently there is a way to do it now, or they're announcing a way to do it. There's also, moving on, there's a bunch of changes happening in the partner center online. This is actually the Australian CRN, but same company, different region of the world. So even though center is spread a little bit differently, so they're making a bunch of changes there. And so they'll be making, looks like all this stuff's coming in October. I think Nick Hetty, the CRO over at Pax8, mentioned some of these changes were coming back at the Exchange in August, CRN Exchange. So it looks like some of this stuff is kind of matching up to that, right? October, changes for referrals and deal flows, partner center changes. Looks like some difference in Azure plans. This will introduce reconciliation data model and changes for Azure savings plans for compute. So this may change how you consume Azure a little bit with some of these new plans that are coming through. Although this one's says partners can only purchase plans through Azure portal now. Microsoft plans aren't available through Partner Center. All right, so like some of the stuff doesn't even look like it's ready through distribution yet. May just be through Microsoft directly. Looks like they're changing things in their marketplace. Yes, Microsoft does have a marketplace. They've been trying to make it easier and easier to do business, with people who do offer their services and products through the marketplace. So some changes there around taxing and API usage, stuff like that. Microsoft Teams Rooms Pro, I haven't even delved into this particular offering, but apparently they're launching Microsoft Teams Rooms Pro, $40 a month through enterprise enrollment for education, cloud service provider program, etc., web direct. More than 60% of Fortune 500 have already chosen Microsoft Teams Room to connect employees. Teams Room remains a major opportunity for partners. Less than 8% of the 90 million conference rooms worldwide are video enabled. Okay. Conference Room Pro includes intelligent audio, video, noise suppression, bandwidth optimization, automatic to active speaker framing, touch display for multi-user. So basically, this is Microsoft's meeting room. I guess compete with Zoom Room, is my guess. And at $40 a month, I guess per room, I guess that's what it is. Okay. Looks like Microsoft has changed nonprofit pricing coming up here. So if you have nonprofits with 365, looks like their pricing is going up. Nonprofit discounts on the 75%. Changes don't affect grant-based nonprofits. Some offers include 10 licenses, 3 million. So basically, they're saying is that we've done a bunch of changes. It's time to upgrade the pricing for nonprofits like everybody else, and swipe the credit card. Here's that NCE discount that we talked about earlier, which is now comprehensive in this update. So you can, again, looks like it's a limited time thing, but there it is. You can dig into that more. New hosted solution options. Microsoft reveals 1 and 3 year subscriptions to Windows Server Data Center and a monthly billing option for 1 year software subscriptions for Microsoft Windows Server, SQL, Remote Desktop. So they're going subscription based on their licensing. Not that they haven't done before because I mentioned SPLA, but they're going on their 1 and 3 year, which matches 365 subscriptions for the actual installed desktop, kind of versions of these. Looks like they changed Windows Server license pack for 1 year, decrease. It's about $50 or so. Windows Server 22 remote desktop licenses 1 year will increase. So it looks like those prices are going up. And once available, Windows Server Data Center, 3 year and 1 year for data center. So it looks like they're just taking all of their, hey, you bought a product and you just wait a couple of years or until it's end, or you wait till it's end of life, you move to the next one. Looks like they're all just going subscription based now on their actual installed software for server stuff. So flexible virtualization, so that software assurance and subscription licensed customers can use licensed software, build and install services, and run them on outsourced infrastructure dedicated or shared. So basically, these are some of the changes that they made in order for people who are outside of Azure, right? Google, AWS, mentioned Alibaba, but basically gives them the ability to license the software, in such a way that they can use that without paying double tax, which is what's been happening up until this point if you're not using Azure.
Okay, that thing that you've got highlighted there, are you really telling me that Alibaba is offering infrastructure services?
Oh yeah, they have been. Yeah.
Yeah. Well, it's amazing what you get to learn when you join with George Bardissi.
I mean, they are the AWS of the desert region. They
Okay.
absolutely do infrastructure. They definitely do infrastructure services. Bring it up, you'll see. I wouldn't recommend you go there, being how your customers are probably based in the US and they're not, but unless you want your services hosted overseas. And then again, Microsoft will offer a license model for Windows Server compatible shared server outsourcing. Instead of partners licensing Windows Server by physical core, meaning customer needs access to the physical server to cover machines physical core. Virtual core licensing will allow partners to license Windows Server by virtual core. So basically, this just makes it easier to host in a virtualized environment, which is practically every major cloud or private hoster out there. Just changing the licensing model to make it easier. This will help cloud providers appeal to customers with legacy Windows Server workloads, enable them to move these workloads from on-prem to the cloud. Like we haven't heard that marketing message for some time. Email preferences, right? So apparently you can get granular with your email preferences in the partner center, opt in, opt out. I guess that's to be expected. I think that's pretty normal. Additional virtualization licenses eliminated after October 1st. Microsoft will eliminate the need for an additional license to virtualize Windows 10 and Windows 11 operating systems on customer server or outsourced server. Again, same thing with the server licensing, now with the desktop licensing. Just trying to incentivize people to get out of the prem and into somebody else's cloud. And again, there's your Alibaba there, Brent, again, as yet another
So
place.
are you telling me that I can now take my desktop Windows 10 or 11 license and I can virtualize it? Is that what that's saying?
It just says we'll eliminate the need for additional license to virtualize. So I would get a little bit deeper and just double check the language, but it kind of sounds that way.
Yeah. Well, that's interesting.
Yeah. No outsourcing SPL licensing. Okay. One of the more controversial announcements from Microsoft ahead of Ignite is the removal of services, SPLA licensing outsourcing on data centers from Amazon, Google, Alibaba, Microsoft. Customers want to use a listed provider for outsourcing can acquire license directly from provider. So basically, instead of you having to set up your own agreement with Microsoft to do licensing, you can just acquire it directly from the service provider. Okay, that kind of makes sense. It streamlines your buying. Partners have until September 30th, 2025 to transition from outsourced hosted to direct licensing model with their cloud providers. Traditional outsource and data center providers will benefit from this change and will help foster the hosting partner ecosystem. So basically just making it easier to buy. And then a new hoster partner program is changing all sorts of stuff here. Microsoft will introduce a program within its cloud solutions provider channel program called CSP Hoster. So that's mostly MSPs are under CSP Cloud Solutions Provider. This replaces Microsoft's qualified multi-tenant hosted program that is meant to allow partners to pre-build hosted desktops and server services for sale to customers who need a new license or already have one. At the beginning of the hosted program, you'd be limited to direct bill partners only, but look forward to expanding the program over time. Customers must have a Microsoft customer agreement with the hosted partner, proof of pre-existing licensing. Partners can access a catalog of Microsoft software used to pre-build services instead of getting distinct media and keys for each customer to deploy and pre-build services. So basically, they're just making it easier to do hosting, so you don't have to manually transact and generate license key orders one by one. So this is like the new version of SPLA if you're doing hosting on your own, it sounds like. Microsoft plans to retire Made in India secure messaging work management application. Encourage users to adopt Microsoft Teams. Well, I don't think that applies to most people who would be on this call, but basically pushing it, this service to Teams. Finally got to the end of this. In August, Microsoft announced some changes to the solutions partner and partner designation system that replaces long used gold and silver system. Microsoft will no longer offer 18 points for editorial. Will no longer offer editorial review of co-branded assets, although go-to-market toolbox will stay active. Tech Giant has delayed until further notice. So basically, we know that there's this new program. We've talked about it several times. You got to get the 70 out of 100 score in order to still maintain partner status with Microsoft, which requires you to take individual competencies underneath of the box in order to get there. So basically, this just follows the gold and silver are going away. So I will stop there, as that's a bunch of changes. Like that was the most comprehensive list of things I found from changes coming into Ignite. But surprise, surprise, Microsoft's making announcement changes going into an event that they're running as they explain new things and what's going on. But general theme, more incentivization to go to the cloud, take on-prem assets, move them, including desktop environments, including server environments. And effectively, they're just trying to streamline buying behavior, to make it easier to do business with people instead of having to do multiple steps to get to the end game. Following that Amazon style model of if it's easy, they will buy. There's some truth to that. So hopefully put a lot of good information out there into the world. We will be broadcasting live from Taylor Business Group Big on Thursday at 1 o'clock Eastern time. Of course, all these sessions are online. You can always go back and grab them later, listen to them later. But we'll be live in Fort Lauderdale later on this week. Otherwise, stay tuned. Tuesdays and Thursdays, 1 o'clock Eastern time, mspinitiative.com. Hopefully we'll see you at an upcoming event. Catch you guys later.
Hey, thanks, George.
Bye.